This is your Chapter 6 video lecture. This is a really long problem, so I'll probably split this up in a couple of videos, but it's a good comprehensive overview of what we do in this chapter. And so it asks us to prepare budgets for 2017, and we're going to start with the revenues budget. And I mean, revenue is very straightforward. You've got your units sold, but when you do a master budget, when you're doing an entire budget, you always want to start with sales price. That drives the budget. That's a very common question I ask on exams in managerial accounting. What drives the master budget? And so we have the Broncos blankets. And we have the Rams blankets. And then we have total. And so at this point, you're basically just finding information up in the problem. It tells you, it gives you everything you need in the problem. It tells you right above where the required information is that budgeted sales for March are 140, Broncos 195. Rams, it gives you the selling price per blanket, $305 and $378. And then from that, you just have your budgeted revenue. But this is where we start. A lot of things are driven by the sales price, and so we have to get a good starting point, and then we can sum that. Okay, then it asks you to do production budget. So you have to know what you're going to sell before you know how many you're going to produce, and this is in units, not dollars. You've got to keep that straight when you're working through a budget. It's very easy to get those confused. And so for our production budget, of course, we have to start with sales. And then in addition to what we sell, we want to have ending inventory to start next month. And so we add desired ending inventory, which is our total requirements. And then if we're going to have an ending inventory, we're going to have subtract our beginning inventory. And that will give us our budgeted production. So don't get too hung up on this. Just imagine this is your business. You know you're going to sell 140 blankets. And so you need to make 140 blankets, right? Very straightforward. But you want to have enough blankets at the end of the month, this is a month we're doing, to be ready for next month. And so you have a standing requirement, and this is in your information. You have a standing requirement that you have a targeted ending inventory of 24. This is given to you in your information. So if you want to have 24 left over and you're going to sell 140, then you have to have 164 units in order to make those goals. But you may have started the month with something, and so you would have to have that information as well, which is also given to you in the problem. Sometimes I have to look for these things just like you do. Oh, it's given to you beginning units, very straightforward. And so if I need 164, but I already have 14, then I really just need 150. Okay, so we do the same thing for our Rams blankets. Our desired ending inventory is 29, and so we can carry that formula over. And we started with 19, so we don't need that 19. We already have those. And so we need to produce 210 of the Rams blankets and 150 of the Broncos blankets. So then the next thing we do, so okay, we know what we're going to sell. We know what we need to produce. The next thing we need is our direct materials usage and direct materials purchase budget. Okay, so you know your sales, you know what you need to produce. Now you have to know how much direct materials to buy. And our direct materials in this problem, we have red wool, black wool, Broncos logo patches, and Rams logo patches. Okay, so I just went ahead and typed in some of the information. We've got the Broncos blankets and the Rams blankets, and we need red wool, we need black wool, and we need patches for each. So if you look back at your information, on the red wool, and again, you're just going to have to kind of spread all this stuff out. But for one blanket, you need 5 yards. And we're planning to produce 150. So you need 5 times 150 or 750 yards of black wool. For the Broncos blankets, you need 1 patch per blanket. We're doing 150, and so you need 150. And this is patches. Okay, and then for the Rams blanket, you need 6 yards of black wool. You're planning to make 210 of those, and so you need 6 times 210 or 1,260 yards. And then as far as patches, you need 1, 210, 210 patches. So that's it. This is, I hate to say it's not accounting. This is management. It is accounting, it's managerial accounting, but don't get hung up on accounting. Think management. Think, if I have to make all of these blankets, what do I need? So this is what I need as far as yards and patches. Now, if we get our totals, this is 750, this is 1,260, 150, and 210. Okay, so that tells us how many yards and how many patches, but we are doing accounting. We are going to end up with a budgeted income statement and a budgeted balance sheet. So we need to know the cost. So we have a direct materials cost budget. Okay, and so I'm going to type some of these out and talk to you. We start just like we do with units. We start with inventory because we have some of the red wool, black wool, and patches in our inventory. And so cost of direct materials in beginning inventory. And we have materials to be used. And then we have cost of direct materials in March, cost of direct materials purchased and used in March, and then finally direct materials to be used. So we kind of start with this, and this is our red wool all in this line. And if you look at your information in your problem, you find that you have 40 yards in beginning inventory. It's got actual beginning direct materials inventory, 40 yards. And the unit price is also given to you is $10 per yard. And I'm trying to point you to the right place for that. Okay, I found it. It's unit cost data for direct cost inputs, and the red wool fabric per yard is $10. I'm going to put a dollar sign there so you'll see that. And so that's $400 worth of red wool that we have in beginning inventory. And then we have materials to be used from purchases. Okay, so this is where you have to really think about, are you doing yards? Are you doing dollars? So if we need 750 yards right here, so this number, and we have 40 in inventory, we need to purchase 710 yards of direct materials. The cost of that is actually going to be $11 per yard, because if you see that information, it tells you that in March it's $11 per yard. And so the cost of the direct materials purchased and used is the 710 times the 11, or 7,800. And so the total direct materials used is what we're purchasing and using plus what we used out of beginning inventory, or $8,210. Now you might want to pause this, rewind, and watch that again, but it's coming from our inventory, and that's why we're having to use two different amounts. And this information, again, is given to you in the problem. It's called unit cost data for direct cost inputs. Okay, and then we do the same thing with our black wool. We've got 0 yards. Let me find it. Black wool. We've got 20 yards. Sorry, we've got 20 yards in inventory. It has a beginning unit price of $14, so that's $280. 20 times 14. We need 12,060. We have 20, so we're going to have to buy 12,040. And the cost of the black wool currently is $13. And so we're going to have to purchase So I just found an error when I was calculating this. I have check figures as I work, and this should be, how on earth this happened, C14, which changes this number, which changes this number. It doesn't change what I've been doing, but it does change those numbers. And then that changes that number. I just don't want to start this video over. Okay, there we go. My check figures were not matching. And so this is why it's very important to use cell references and not hard numbers, because then you can't type a number in wrong. Okay, then, so this is what we have to purchase, and this is what we have in beginning inventory. So then we're doing the same thing over here. Beginning inventory for patches, and again, you go back to your information in your problem. The unit price for patches was 8. So we've got 400. Materials to be used, we're going to have to buy 100 of those. And we buy those at $8. So that's 800. And so we're going to have beginning inventory that we use plus 800. Or $1,200 worth. Hopefully you're catching on. Sorry about the mistake. I'm just glad I caught it before we got too far into the problem. These patches in February were 7. And so that's 65 times 7, 455. And we're going to need... So I didn't change that number from previously. Okay, now we're good. So if we have 65 in beginning inventory and we're going to need 205, then we need 140. They are now $9. And so that will be 1,260. And so we have the cost of the direct materials we're going to purchase plus the cost of beginning direct materials, or $1,715. Then if we add all this up, this is our direct materials to be used, not purchased, but used. So you might want to go back over that. And again, I apologize for the error, but it happens. This is why you want to double check everything. But you've got beginning inventory, and those costs are given to you. Then you have the purchases you need based on usage, and then that gives you your direct materials to be used. Then you have your direct materials purchases. And I am going to pause the video right here and start up on the next one so that we don't get these videos too long. But again, please, before you start that next one, make sure you have a pretty good handle on where we are right now.